Today, we're going to pull back the curtain on how professional trading systems are actually evaluated. We're going to forget all the hype. Instead, we'll break down a real performance report to see what separates a truly disciplined system from just, well, a lucky guess.
So here's the big question, right? Is a system genuinely intelligent, or is it just riding a lucky wave? That's what we're here to find out. We're going to dig into the data and look for hard evidence of skill, not just random market noise.
So here's the plan. We're going to walk through a formal report on a system called OLECTRA, and by the end of this, you'll have a much clearer idea of what makes an analytical tool professional grade and how it's really judged on its logic, not its ability to predict the future.
This right here, this is a huge mindset shift. Professional systems aren't about having a crystal ball. Nope. They are judged on how well they can interpret what the market is doing right now, its structure, and then react to it logically without any emotion. It is all about a disciplined response, not magic tricks.
Okay, enough theory. Let's get to the evidence. We're looking at the OLECTRA system's performance on one specific day, December 10th, 2025. And on this day, the market threw two very different challenges at the system. So take a look. On the left, you see the market open. It's quiet, it's contained, nobody really knows what's going on. Then on the right, the whole character of the day changes completely. It turns into this persistent, clear downtrend. Let's see how the system handled both.
All right, let's zoom in on that first phase. The report calls it a restricted, low-energy zone. You can see it, right? Just look at how narrow the range is on those candles. There's just no conviction there. So the system's first job was simple. Map out the existing support and resistance, and then just wait.
And a huge part of that map are these retracement zones. So what are those? Well, you can think of them as pre-calculated areas of interest. They're basically price levels where the market is likely to react. They give the system a structural skeleton to build its analysis on.
And here's the crucial part. The system's bias engine comes online. And what does it say? Neutral. It didn't try to guess bullish or bearish. It correctly saw that the market hadn't picked a side yet. And that lack of action, that right there, is a sign of intelligence.
But, markets don't stay quiet forever. After that initial phase of just indecision, the whole tone of the market shifted, and it shifted dramatically. The price broke down and just started this steady, controlled slide for the rest of the day.
And this is where the system really proved what it's made of. The bias engine flipped from neutral to strong bearish. And what the report highlights is that it held that view with discipline. It aligned with the new trend structure and didn't get faked out by every little green candle along the way.
Okay, so we've seen the story of the day. The system navigated two totally different market types. Now let's dig into what the performance report actually said were its key strengths. What did it do right?
The report pointed out 5 big ones. It had structural integrity, it wasn't fooled by noise, its levels were on point, that bias engine we talked about was reliable, its trend framework was disciplined, but maybe the most critical thing of all, it successfully separated the market's deep underlying structure from its noisy short-term momentum.
And this table just illustrates that point perfectly, doesn't it? When the market was uncertain, the bias was neutral. When the structure broke and a real trend formed, it became strong bearish. It was a completely logical, evidence-based transition.
The takeaway here is so simple, but it is incredibly powerful. The engine didn't lag behind the market, but it also didn't jump the gun. It gave the right signal at exactly the right time. And that is the hallmark of a professional grade tool.
Now look, a professional report isn't just a pat on the back. It's got to be honest and constructive. So the analysis also identified a few areas where the system could be refined. And these aren't failures. They're opportunities to make it even better.
For instance, the report suggested maybe adding more granular filters for that quiet opening period, or finding a way to confirm a new trend just a little bit earlier without losing reliability. These are exactly the kinds of tweaks that take a system from being good to being truly institutional grade.
So after weighing all the strengths against the areas for refinement, what was the final call? What was the overall verdict on the system's performance that day?
Well, the summary boiled it down to 4 core qualities. The system was stable and internally consistent, it was structurally intelligent, and maybe most importantly, it showed it could guide decisions without emotional distortion.
This quote from the report's conclusion, man, it just says it all. This is the goal, this is what it's all about. To build a framework that sees the market for what it actually is, based on its structure, and strips away our human tendency to react with fear or greed.
And that leaves us with one final thought to chew on. This whole case study suggests that maybe the ultimate goal of system design isn't about predicting the future with perfect accuracy. Maybe, just maybe, the real goal is to achieve a perfect, disciplined mastery of the present moment.